Big 10-year note auction less than an hour away. And the Dow, kind of flat and bumping around, is up over 4% in the past week. But many are asking, is this a sucker's rally? Let's gather our Power Lunch market insiders. Joining us now, Kelly Campbell of Kelly Campbell Management and Kevin Cook of Peak 6 Investments. Kelly, just tell me right now, the Dow's at like 10,250. Will it be higher than that or lower than that at year end?
Oh, great question. We think it's going to be higher. And one of the reasons we think, because there's still a lot of momentum left in the market. There's a lot of different things a lot of ways we could go. We are cautious, though, because it still could go down. But at the end of the day, it's how you build a portfolio and make up for some of those losses that could potentially take you by surprise.
Yeah, and you say the unemployment problem has been oversold here?
Well, if you think about it, everybody's focusing on the unemployment numbers, but everyone has talked about, for the last few months, we've all said that, look, unemployment's going to get worse. It's going to get worse before it gets better. And what's happened? It's gotten worse. Well, guess what? It's starting to get better because the numbers are increasing at a lower rate. Now, it hasn't gone the other direction yet, but that will happen, and then we'll all be a lot happier. But it'll make people more happy just to know that, yes, people are able to spend more money. People do have jobs. They're not afraid of losing their jobs when they go to work.
We are 45 minutes away from this 10-year auction, biggest ever as the government tries to borrow money. Is this a potential threat to the stock market if it doesn't go well? How do you think the auction's going to go?
I think it's going to go smoothly. Typically, foreign governments and U.S. primary dealers are going to be in here supporting this auction. In June, we had a scare when yields ran above 4% on the 10-year, and we thought, that was going to run away. It was just really a shift higher on the yield curve. In October, everybody was saying, oh, no, the yield's going to collapse to 3%, and it didn't. So we're still in this trading range here for the 10-year between 3.25 and 3.75. So traders here that I've talked to, will watch this as one of the biggest auctions we've seen in a while, or actually the biggest auction, $25 billion for the 10-year.
Okay.
And they've seen a lot of sellers come in. So when we look at the futures here, the 117.25 level on the 10-year note futures is kind of a key level we'll be watching.
Kelly, you are bullish on the market longer term, but you're also positioning yourself in a somewhat defensive way to try to take advantage of some trends. You like commodities, currencies, global real estate. You're basically shifting away to a certain extent from a pure equity position, correct?
Well, I guess the point I would make in that is that we are trying not to focus just on one market. Because when you say, is the market going to be up? Yes, I guarantee you the market will be up by the end of the year. But what market are we talking about? The more markets we can include in our portfolio, I think the better off we'll be. And that'll also reduce risk. Also, one last thing I'd also say, go long and short. In other words, get into a fund that allows you long and short. That's what we've done a lot, because then you can benefit not only when the market goes up, but you can take advantage when the market goes down as well.
Hey, Kevin, you expect a pretty good auction today with the 10-year notes. Why should that be? Why do foreign governments continue to want to buy 10-year treasuries if the outlook for the U.S. dollar is to get weaker still?
Well, what else are they going to do with their dollars? China is finding some things to do, go out and buy other assets, invest in other countries. But
just $2 trillion to go.
Yeah, consistently. There's a stability here, and a symbiotic relationship. Is U.S. debt in danger of losing its AAA rating? I don't think so. And if foreign governments thought so, we would see the net effects of that already. The only instability we might be watching is if the yield curve is unnaturally fixed right here because of Fed action, and the valve for that is the dollar.
Yeah, I hate that old unnaturally fixed yield curve. I can't stand it. All right, thanks very much for being with us, Kelly.